Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, July the 22nd. I'm Eric Wilkinson, and yes, you very well may recognize me from mainstream media, where I've talked about the economic data, the geopolitical environment, how that impacts the overall markets with my market analysis. And I do the same thing in these daily market commentaries, but I'm layering on top of it the option strategies I use in my portfolio to increase that overall yield. I talk about them win, lose, or draw, so you guys get to see it here first. Without further ado, let's get on with the economic data. Well, let's talk about Canada's economic data. Why? Because that's all we got to talk about. So in Canada, we got core retail sales coming in at 10%, 10.6%, expected to be 11.9%. Both core and retail sales below expectations, but they did revise last month's number up almost perfectly to put that in line. So if there's a silver lining, that's what we got. But Canada really not driving the world economy there. All right, let's talk about the markets here. We've got crude oil moving higher. It looks like it wants to stay into that 40 handle for the foreseeable future, as we have talked about. I can't see it making much more of a move higher. Definitely not looking at testing that $50 a barrel mark, I don't think, as the overall economy looks like it is not going to be really coming out of this pandemic anytime relatively soon. That means going through the summer, which a lot of these businesses are going to be making their money, or generally would be making their money in the summertime. And the one thing that is really firing on all cylinders here is that trade that I've talked about, where I don't think people are going to be flying in airplanes or staying at Airbnbs, but it's getting out to nature. So if you're thinking about adding stocks to a portfolio, maybe look at something like the outdoorsy type businesses, Yeti, Tractor Supply Company, things like that, where people are going to be purchasing kind of camping gear or getting out there and doing picnics rather than going to the restaurants and things of that nature. Well, that requires people to drive, and that's going to be a driver of gasoline. Problem is, much of the demand for crude oil is in the manufacturing through the distillates and airline fuel, stuff like that. All of the stuff that we break that black gold down into in those distilling processes come up with different layers of products that we use, and one of the major ones is going to go to that most of the demand is going to go to that manufacturing sector. So I don't think that the consumer, the retail person, the person out driving is going to make up enough demand to really drive crude oil that much higher. All right, bonds up 18 ticks on the day. We're seeing some weakness across the board actually we're seeing a real mixed bag in the equities, to be quite honest, but bonds are priced appropriately. Interest rates are relatively low, and that's kind of where we're going to see them. Gold getting a huge spike today, up 23, almost $24 on the day. Starting to get those shorts on their heels, so we could easily see a pop up to that 1900 that we've talked about. As a matter of fact, that I don't know where I just went with that, but I didn't want that. Anyway, the 1900, I wanted to squeeze this down. There we go. 1923 is kind of that line in the sand that we're looking for. That brings us back to those 2008 highs. So we're going to be keeping our eye on that. Now that we are on that move, it looks like that's where we could start seeing the markets jump to. I'll have to figure this out later. All right, so gold futures making that move. It looks like 1900 handle is almost a sure thing, especially with the VIX starting to move higher, the dollar weakening, probably signaling there's some problems in the equities. So let's get over to that. We're seeing the Dow Jones start to move higher again. This is kind of that whole trade that I've been talking about. A lot of the stocks over there in the Dow have been a bit of a lagger. We're starting to see some sector rotation again, as NASDAQ was pushing higher earlier this morning, but starting to see some weakness. You can see we got some tweezer tops here, down 100 points in the NASDAQ right now, back to that Fibonacci, the 78 Fibonacci, when we talked about that yesterday. we peeled above. As soon as we got above that, the market really started getting some momentum there. But now we're starting to see some weakness in some of these big names, and 50% of the overall market here is correlated to basically Apple, Facebook, Microsoft, Google, Amazon, and Tesla. That's 50%. So when those guys start showing some weakness, which is what we're starting to see today, those big high-tech flyers are starting to make this market show some weakness there. And I believe it's because I've been talking about it, and yes, I've been a little bit early, that people have got to be thinking that they are seeing these multiples that are going to be very difficult to sustain going forward. But there are stocks out there that may have the ability to make a big move to the upside. So I think that we're seeing some people try and take advantage of that. And that's why we're seeing the Dow Jones and the E-mini S&Ps hold up under this type of sector rotation. People are still looking for it. So it doesn't necessarily mean there's a top in markets across the board, but it does mean that there is some weightiness to this rally that we've seen, and we could start to look at a sideways to a slight correction here going forward. I don't think we're going to start seeing probably an all-time high in the E-mini S&Ps, although we are seeing the highs for the year start to get very, very close. All right, E-mini S&Ps overnight inventory. You can see the rally right after my daily market commentary. Just blew it off the top. But overnight inventory got very long. I'd say in the day session, we were able to flush out pretty much those longs. I don't know that we're out of the woods on the downside here in equities at this point, but some good some good earnings coming out across the board. We saw Coca-Cola come out with good forward guidance. Philip Morris, we'll talk about here in just a moment, did quite well also. Who was it that I missed? Oh, Microsoft was after the close. I totally missed on, or actually Microsoft is coming out. I think it was maybe IBM that I did not see have earnings that I wanted to talk about here. IBM came out with theirs, as you can see, better than expected. Also, forward guidance really good. You know, they are, the thing is, the street, I didn't get involved. I'm glad I missed this as an earnings trade, because I always try to play IBM to the upside, big blue. They've switched over from a service economy to, or a service company to a more high margin, low employee kind of based, or low cost of running, which is in the cloud services. And they have done very well switching over to that. For some reason, analysts and stuff like that don't really like them having high margins, which is just ridiculous. Anyway, blew off the top earlier this morning. Looked like it was going to be a nice move, but you can see that they are almost back down to unchanged on the day as the heavy selling comes in. So people, I don't get it, don't love how IBM is changing their business structure there. All right, Philip Morris coming out and doing very well also. One of the thing is the, the IQ, basically their vaping products have increased and are now a quarter of their business, doing very well. And basically the earnings call, listening to the CEO, reiterating that. As a matter of fact, he was as surprised as anyone, he said, on how much his product was coming off the shelves, where people were buying that during this whole pandemic. Well, that's what I talked about. People are sitting at home and probably not at the work environment where they can't just, or they would have to go and wait for a smoke break or something like that, their 15-minute break. Well, now they can start pounding away at those as the day goes on. So Philip Morris doing very well at this stay-at-home type of trade. So with that being said, I went into Philip Morris and had sold some puts in there, and I tweeted this out. I did it late in the day. It was actually right towards the close. last minute kind of decision here and went into the July weeklies. I sold the July weekly 70 puts in there for 37 cents. I was able to buy them back for 6 cents this morning. And then I also decided to go in and play with lowering cost basis. That's the fun trade, right? I am long Coca-Cola, a little bit overweight in Coca-Cola also, as it is the reopening trade, and that is a little bit slower to happen than what I was originally expected. And if you guys remember, I basically have this trade on where I had sold some April 53 puts in there. Well, I've lowered my overall cost basis on this trade by about 70 cents or so. So continuing, I actually sold some puts at the 30 handle when we got that real sell-off. I had put the stock at 53. Well, I decided to go in there and sell some calls against that at the 50 handle. So I'm selling the August 50 calls in there for 33 cents. And so I have a covered call trade on it. And that's not to cover the entire trade, but what we're trying to do here is lower the overall cost basis on what I've got with Coca-Cola. I'd be happy to get out of some of these at around 50 because that seems to be where the major resistance is. And I don't think that they are going to have a whole lot of upside potential with restaurants not really opening up to full capacity. So, and bars and nightclubs closing down. So that's about 50% of their profit margins. So they're going to struggle there. So I'm going to look to lighten up, or at least just lower my overall cost basis on this trade here. So continuing to stay mechanical with some of those trades we have in our portfolio that we don't always love. And even if you do love them, it's great to lower cost basis whenever you get the opportunity. And something like this, I expect the volatility to continue to trickle out of this trade and continue to move sideways in and around where we are right now. I don't know that 50 is going to be anything that happens within the next 30 days. I think we're going to build up a volume node right here at around $45, let's call it, kind of middle of that road. You can see where it has created a pretty sideways market here, and $50 being that resistance area that gets some heavy selling coming in and volumes start to spike. So I'd be happy to have somebody call some of those away from me at that level. And that's why I picked that strike location. All right, so that's all I got for you guys. Check out the webinar this week. We are doing a roadmap to building an option strategy. When we come up with a directional assumption based on something we're looking at in the markets, well, we need to find out what is the appropriate strategy for that environment. It's not just going out there and picking an option strategy out of the hat. We have some specific guidelines that you can follow in order to implement the right strategy around your given assumption. All right, so without further ado, please take a moment to go over our disclaimer. We are an educational company. We are not here to solicit you to buy or sell any of these securities or strategies. There is the possibility you could lose money as well. So make sure you read over this and know what is all involved in trading. All right, so that's all I got for you. Other than if you can't take that, take it easy.